I now hand the conference over to Mr. Ankur Periwal from Axis Capital. Thank you, and over to you, sir.
Thank you, Steve, and good afternoon, friends. Welcome to Coromandel International Q4FY21 and for the financial year 21 earnings conference call. The call, as usual, will be initiated with a brief management discussion on the quarterly as well as the full year performance, followed by an interactive Q&A session. From the management team, we have with us Mr. Sameer Goel, Managing Director, Ms. Jayashree Satagopan, EVP and Chief Financial Officer. Over to you, Sameer sir, for your initial remarks, and then probably we can open the floor for Q&A.
Yeah, Ankur, am I audible?
Yeah, sir, you are audible. Thank you.
Okay. Good afternoon, everyone, and thanks, Ankur, for organizing the conference call. I hope everyone and their families are keeping safe in this unprecedented Black Swan event, and especially in the second wave, which has hit all of us, right? So I will first give an overview of the business environment experienced during the quarter and the year, and the company performance, followed by company performance, and we'll have the Q&A. 2020-21 has been a Black Swan event, exemplified by the unprecedented disruption to across the world to both economy, trade, and health. IMF estimates puts the world output to have declined by a negative 3.3% in 2020. In India, while early on the contraction was supposed to be over 10%, but now they expect the contraction to be around 8%. This is partly got to do with the sound economic recovery, boosted by increased public investments, the vaccine rollout program, and the surge in overall domestic demand. Though the path of recovery has now been challenged with the emergence of the second wave, the ramped up public health measures and policy intervention lend support towards achieving stability over the coming months, and we hope again to flatten the curve. As far as we are concerned, the good news is agriculture sector has been a bright spot. Not only that, it's no longer considered to be sunset industry, it is now almost sunrise, and is expected to grow by 3.4% during the year. India is expected to produce a record food grain production over a bumper crop last year of 303 million tons, and a horticulture input of 325 million tons. There is also a great improvement in cereal exports. The government at the center and state were very supportive in enabling continuation of the operations in rural India. Reform like the advancement of the PM Kisan disbursement, direct money transfer to the farmers, increase in MGNREGA outlay, increase in the agriculture credit scheme, high procurement of MSP both of Kharif and Rabi seasons. All this was implemented to boost the agriculture economy. When you look at DBT and subsidy, it is 3 years now that the DBT, which is direct benefit transfer, although routed through fertilizer industry, has been rolled out, and the system has become fairly robust. During the year, the government allocated an additional 65,000 crores towards clearance of all old and carry forward subsidy to the industry. Consequently, the subsidy payment by the government was very high during Q4, which has helped the industry in reducing its outstanding and improving its cash flow. Further, in the budget for FY 2021, the government has allocated rupees 79,500 crores versus rupees 71,300 crores of last year. Coming now to the fertilizer industry performance for the quarter, DAP and complex fertilizer primary sales volume is down by 10%. Current year 38.3 lakh metric tons versus 42.6 lakh metric tons last year. Industry peers sales, which is a real indicator of real consumption at farm level, is higher by 15% over last year. This also shows, the summer crop has been very favorable. So it is around 46.5 lakh metric tons vis-a-vis 40.4 lakh metric tons previous year, same quarter. Complex primary sales volume for the quarter is at 26.6 lakh metric tons versus 23.8 lakh metric tons in the previous year. We've also seen major raw material prices continuing for an upward trend. Phosphate prices for April-June, which is Q1 FY22, has seen a sharp increase and has got finalized at $998 per metric ton compared to Q4 of $795 per metric ton. The government has written to some of the major suppliers to see what they can do on the pricing front. For the year, the DAP complex fertilizer industry volume was at 219 lakh metric tons versus 200 lakh metric tons the previous year, registering a growth of 10% year on year. Am I still audible?
Yes, sir, you're audible.
Okay, thanks. Complex volume to FY21 is at 100 metric tons versus 79.3 lakh metric tons over the previous year, recording a 17% growth. DAP volumes has been at 104 lakh metric tons versus 102.7 lakh metric tons, recording a growth of 2%. Coming now to Coromandel's performance. Coromandel, as you have seen, has registered a very strong performance for the year with its continuous emphasis on superior sales mix, farmer connectivity, increased operational efficiencies, and also better working capital. We are focusing more on consumption than on primary sales, and that has been reflected in all our marketing activities. Coming now to our company nutritional segment business, the nutrient and allied business segment has had a subdued quarter as the company had advanced and completed the annual turnaround of its plants in the last quarter. And this was actually, while not planned that way, but was very helpful as we were able to complete most of the work before the second wave of pandemic has hit the country. And that is very good because in hindsight, because if we had to open up the plants now, either we had to postpone, which is not right, to push the annual turnaround, or we would have the annual turnaround and then we would have trouble in implementing the same. So in a way, in retrospect, it was a very good decision despite the impact it had on our Q4. For the quarter, the volumes of DAP complex sales were lower by 15% to 5.9 lakh tons, mainly because of the annual turnaround which we took. The company market share in Q4 was 15.3% versus 16.2% during Q4 last year. However, the company POS sales, which is the actual consumption, and our marketing team is getting more efficient at this, was at 20.1% for the quarter. Last year it was 18.7%. This reflects the lower inventories which we are carrying in the system, which also reflects in our working capital management. The single super phosphate Q4 sales was at 1.8 lakh metric tons with a growth of 67% over last year. Again, a reflection of the fact that when the DAP prices move up, farmers do switch to SSP, and we are the market leaders there. For the year, YTD DAP and complex volumes were up by 7% to 33.5 lakh metric tons. For manufactured DAP and complex volume was at 29.4 lakh metric tons, and imported DAP complexes were at 4.1 lakh metric tons. Company market share has come down very marginally at 15.3% from 15.7% same period last year. However, the company POS market share is at 15.7%, more or less at the same level as last year. In fact, the company POS sale has actually grown, which is a true conflection, by 18%. In the full year, our DAP and complex fertilizer plants operated at 82% capacity, recording a production of 28.54 lakhs metric tons, which is 4.7% lower than the previous year. Overall, the production was impacted due to the partial lockdown during COVID in Q1 and the fact that we took two annual turnarounds. This time we also brought forward our annual turnaround for next year. SSP sales were at 6.7 lakh metric tons with a growth of 17% over last year. On the manufacturing front, DAP complex fertilizer operated at 82% capacity utilization for the quarter, whereas the company had advanced and executed annual turnaround activities in Vizag and Ennore. The capacity utilization for full year was also the same at 82. While the capex projects were deferred during the initial part of the year due to COVID pandemic, project momentum was built up in the second half of the year. A large evaporator plant is coming up at Vizag to improve the availability of concentrated phosphoric acid, which we can also use to transfer to our phosphoric acid requirement in Kakinada. A pilot liquid fertilizer plant is being set up at Vizag. Our organic and specialty nutrition business has performed very well and has had a very strong double-digit growth with a focused product and special crop-based nutritional approach. We have partnered with seeds, micro-irrigation and farmer producers organization has also strengthened our connects with the farmers. We have also set up nutri clinics in major markets just to dispense the advisory to the farmers. On the crop protection side, the crop protection and bio business registered an impressive sales growth of 24% during the year with the expansion of domestic formulation, domestic business-to-business sales and also exports. On the domestic B2B sales, we are now branding the products and supplying to our customers, and that has helped us to really grow. As far as the domestic formulation sales is concerned, 25% of our sales is from our new products and co-marketed products. The business margins have been healthy with the improved sale mix, smart sourcing and higher capacity utilization. The business continues to focus on new generation molecules and has been upgrading its products with several product introduction. During the year, the new product, like I mentioned, have contributed to close to 25% of the domestic formulation sales and also supported the growth of our B2B segment. It has now built a rich product portfolio pipeline backed with strong R&D capabilities and is partnering with global innovators to further strengthen its product offering. Our R&D facilities at Hyderabad and Savali are being upgraded, and so is our tech transfer facilities in Ankleshwar. The business has received registration of 10 plus molecules during the year for domestic market and has got over 50 registration for the international markets. We've also obtained approval for selling Mancozeb WBG for our the Brazil market. And one of the things which we are strengthening is we are strengthening our teams in the market, especially the export markets, by putting residential people there who are the experts in that market. Our retail stores has to be done, did a phenomenal job in this COVID situation. And they followed all the safety protocols. In fact, they opened up much more earlier than the dealer channel also, so as to support the farming community by offering agricultural solutions, including product farm advisory and mechanization services. Business has improved its operational efficiency and leveraged technology to reach out to the farming community. In fact, JB Vicast actually had achieved its sales in the 6 months on what it planned to do for the full year, reflecting the move away to farm mechanization because of labor shortages. So the company has geared up its effort to minimize the impact of COVID and ensure safety of its employees and also serve the community close by. The company is also encouraging employees and families for vaccination to ensure maximum reach of vaccination and also minimizing any impact of COVID. We are working closely with the government and the local administration. Last year, we set up a special COVID ward hospital at the Kakinada General Hospital. This year, we have already undertaken to set up 5 what is called skid-based oxygen-producing units to be set up in 5 different hospitals across the country. With good reservoir levels and a forecast for normal monsoons, we expect the Indian agriculture growth to continue in the upcoming Kharif season. While the raw material prices have hardened in the last 4 years, the company will focus on further improving its operational efficiency, introducing new products, and continue to support the farmers in improving its crop productivity and bring farm prosperity. Overall, Coromandel has had a very strong performance during the year as it effectively navigated COVID-induced uncertainty. The company has shown agility in prioritizing the health and safety of its employees, ensuring safe running of its operations, optimizing production, and catering to the need of the farmers by selling based on consumption and not on just marketing the product. It has strengthened its marketing and branding initiatives, operating efficiencies, product mix and pipeline, while also deepening its farmers' engagement with the digital footprint. As we enter into the new year, we see the emergence of the second wave of pandemic. Coromandel has reinforced the COVID protocols for the well-being of its employees and safe operation of its plant. Most of our employees have taken the vaccination. Now I'll hand over to Jayashree to share the company financials, which we can then follow with the Q&A.
Thank you, Samir. Thank you, Samir. I hope you and your families are safe and keeping well in these testing times with the re-emergence of the COVID pandemic. Let me now provide you updates on the company financials. Coromandel recorded a consolidated total income of rupees 2,872 crores during the quarter ended 31st March 2021, vis-a-vis rupees 2,881 crores during the previous year. Nutrients and allied businesses contributed to 83% share, and the remaining 17% came from the crop protection business. Previous year, this was 85% for nutrients and allied businesses, 15% from crop protection. In terms of subsidy, non-subsidy, the share stands at 74 and 26% during the quarter. Previous year, it was 78% and 22%. The company's consolidated total income for the year ended 31st March 2021 is rupees 14,257 crores, vis-a-vis rupees 13,177 crores last year. The company registered a growth of 8%. Nutrients and allied business contributed to 85% share. Subsidy revenue is at 78% of the total revenue versus 80% during the previous year. As far as the profitability is concerned, EBITDA for the quarter was at rupees 260 crores against rupees 391 crores of last year. The share of non-subsidy business EBITDA improved to 44% from 28% during the same quarter prior year. Net profit after tax for the quarter was rupees 156 crores in comparison to 234 crores during the corresponding quarter last year. EBITDA for the full year crossed rupees 2,000 crores and it stood at rupees 2,018 crores vis-a-vis 1,733 crores of last year, registering a good growth of 16% on a year-on-year basis. Subsidy share of EBITDA was at 72% for the year. It was 75% during the previous year. Profit before tax was at 1,786 crores as against 1,379 crores of last year. Net profit after tax was at 1,329 crores with a growth of 25% over last year, that is 1,065 crores. Subsidy outstanding as on 31st March 2021 was rupees 590 crores vis-a-vis 2,316 crores during the previous year. Subsidy outstanding includes rupees 332 crores relating to the channel stock pending process acknowledgement. During the quarter, subsidy receipts from the government was rupees 2,943 crores. Comparative figure last year was rupees 100 crores. Subsidy receipts during the full year was rupees 5,041 crores vis-a-vis rupees 3,424 crores during the prior year. With focus on market collection, good subsidy receipts, and prudent management of inventory, the working capital position of the company improved all through the year. The company generated rupees 4,124 crores of net cash flow from operating activities. The company has become totally debt-free. Balance sheet remains strong and healthy. Company continued to maintain deposits, which are earmarked for specific growth-related investments. Good business performance, working capital management, and lower borrowing costs resulted in lower interest. Net interest cost for the quarter was rupees 1 crore vis-a-vis 34 crores last year. Interest cost for the year is about 65 crores, which is down from rupees 198 crores during the last year. During Q4, rupee remained in a broad range between 72.28 to 73.78. During the year, foreign exchange exposure has been managed quite well, with the company following a prudent and conservative approach in line with its hedging strategy. The board has recommended a final dividend of rupees 6 per share, which is 600% of the face value of rupees 1 per share. The board had earlier in February 21 approved payment of interim dividend of rupees 6 per share. With this, the total dividend for the year is rupees 12 per share, that is 1,200% on the face value of rupees 1 per share. In terms of the financial performance, it has been a great year overall. We thank you very much for your interest in Coromandel and joining us in the call today. We shall now open the session for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tarang from Old Bridge Capital. Please go ahead.
Hello, ma'am. Good afternoon. Congratulations on a very lean balance sheet that we saw. So just a couple of questions from my side. In Q4FY21, we've seen a significant decline in your cosmetics manufacturing margins. What led to this? Also, with the phosphate prices now rising to about $1,000 per ton, how should we see this drill down impact to your profitability, and what are the steps that you're taking to protect your margins here?
Thanks, Param, for the question. I hope you and your family are safe. As we have seen in Q4, the phosphatic volume dispatches has been lower. We had almost a lakh of metric tons lower compared to the prior year. In line with the company's policy of not going too aggressive on pre-placement, and this is something that we have been following over the last 3 years, we've continued that approach. The second one is also the increase in the raw material prices that we have seen over the past 3 to 4 months. And as I had mentioned, we have taken the annual turnaround of the plant in Q4, which was a thought through action. We have advanced it and implemented it. During earlier part of the year, the fertilizer units could not take their annual turnaround because of the COVID pandemic. So we had continued the operations all through, and the original plan was again to take it in April, May. However, we thought it would be better to take the annual turnaround, advance it during a period when the farmer level consumption is lower, so that the plants will be fully ready, functional, and we can produce more during the peak season. So these are some of the reasons where you would see that there is a decline in the fertilizer margin. As we have indicated in the past, for the phosphatic business, we should look into the margins overall for the year. We could see some aberrations between the quarter. So overall for the year, the company has performed well in terms of its margin. You are right. The phosphoric acid prices have gone up, and this quarter price is settled at about $998 to a metric ton. So the company has done few actions. We have procured material, especially inventory in transit and at our plants in advance, anticipating a higher price in the first quarter of FY22. So we do have inventory that can take us, say, for a month and a half as we move into this quarter. The second thing that we are also doing is, with the preponement of the APA and the Vizag plant fully operational now, both our phosphoric acid plant 1 and the phosphoric acid plant 2 would be fully operational to see how we can maximize the production to ensure that the value gap is helping us in our costs. The third one that is also being done is actioning around various parameters where we can get the cost down in the manufacturing area. We have indicated in the past that the company has and is working on a manufacturing center of excellence. So there are several activities that are happening on it. From it, the supply chain center of excellence that was undertaken by the fertilizer business a year and a half back is also yielding results in terms of cost of transportation, direct deliveries being made rather than sending it to rake points, holding at intermittent warehouses. So all these actions are being taken to see how we can conserve and continue to improve on our profitability in the fertilizer business. Apart from this, we are also looking into pricing at the appropriate time. Currently, whatever is being manufactured and bagged would continue to go in the earlier MRPs. However, a price revision is being contemplated and will be taken up. I hope this clarifies it. Sure, Samir, please go on.
I think, what is happening is, and that's a move which we took a couple of years back, we are backward integrated, and therefore now, especially on phosphoric acid, our Vizag and Ennore unit, are completely self-sufficient. Not only that, we have excess capacity with the running of both our PAP1 and PAP2 in Vizag, and with that, we are also putting up what is called a 10th evaporator, so that we have already started moving phosphoric acid, which we produce from our own rock, into Kakinada. Having said this, we are also looking at a strategy of producing. That's how we have developed our plants, engineered our plants, which can also take what is called low-grade acid rock, and therefore we have multiple sources of that rock, which again gives us the efficiency to drive our costs down. Last, what we are looking at obviously is in terms of also diversifying our sources of acid, and to ensure that one of the things which we have done as a past, this impacts mainly DAP because P content in DAP is very high. So as a strategy, we are promoting more of NPK, and especially with the prices going up, they will be. And last year also we had seen that the DAP has not grown as much as NPK. And here we are pushing what is called our own unique grades. Last year we had a 5% point rate, and we are now branding these grades. So we are calling it Grow Max. We just now launched a product called Grow Shakti and Grow Smart, and therefore these grades have been very well accepted in the market, and we are adding more this thing which benefits the farmers to it. So our strategy will be to continue to, have a balanced nutrition, which is the need for the farmer with the NPK grades. And that's why we could continue to maintain and improve our efficiencies.
Okay. Thank you. Thank you for the detailed answer. Just a follow-up. One, if I got it correctly, you all haven't yet taken any price hikes, and you all are contemplating hikes, correct?
Yeah. We have looked at some of the prices which you have taken as on our unique rates, not on the mini ones.
Okay. And second, are you witnessing any escalation in your phos rock procurement?
In terms of what? So there what we are doing is two things. So we have looked at, there's certainly some freight cost which is going up, but we have looked at diversifying our sources, and we are using a different rock mix, which also helps us. This is what I've indicated. And the plants are going to produce according to that.
Okay. I have a couple of more questions. I'll join back with you.
Maybe you can come in the end. Yeah. Thanks.
Yeah.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi, hi Samir and Jayshree. Thanks for the opportunity. I'm again now coming to this crop protection side. This Q4 typically has a high this biopesticide contribution. Despite that, EBIT margin has declined. So, is there any one-off? And how do we see crop protection from here? The way we are introducing more and more new products, as well as and earlier we had aspiration of hitting 2,500 crore kind of a revenue on by 23. So if you can share some more color.
Sure. Samir, shall I?
Yeah, go ahead. Yeah.
Okay. Thanks for your question, Bharat. For us, in crop protection, the growth during the quarter, as you see, has been good.
Correct.
We were able to sort of focus for the Indian market on the new products that have got introduced. Especially Pamiflozin has got a good traction, also with our B2B customers. While the margins as well as the sales in the domestic market has been very encouraging, there has been a bit of price pressure in the global market. We have also seen in CPC that the raw material prices have gone up in the last couple of months. So the business has taken pricing decisions, and that is being effected during April and May this year. So that's the reason why you would see a little bit of a contraction in the margin. Last year, most part of the last year, we have seen that RM prices were ruling quite favorable. However, in the last couple of months, it's gone up. We have also seen that the freight costs have been very high, especially the container availability. And shipping out to the global markets has been a bit of a cost addition.
Correct.
Having said that, the business is definitely focusing on seeing how to improve its overall revenues across the global markets as well as India. There are a few things that are currently being worked out. The first and foremost in the global markets, in the key markets, as Samir was mentioning, we have recruited locals who would know the business there and very ably work on the B2B side. The second one that we have also focused on for the global markets is increase the registration. And when I talk about registrations, it's also about some of the combinations and formulations that can be shipped to these markets. That's a very good move that the business has taken up. We have also engaged a consultant who could help us in understanding and looking into the right molecules for some of the important markets. On the domestic front, the Sales and Channel Center of Excellence has been kicked off. Similarly, a Center of Excellence on new product launches has also been kicked off.
Okay.
The business has taken and created a Japan desk because working closely with the innovators is going to be extremely critical as we want to introduce more of line 3 products. So that is a very recent development that has happened. On the manufacturing front, apart from setting up plants which can help for future growth, it is also equally important that we get our cost propositions right. So we have taken an expert who is currently working with us on our key molecules, looking into every opportunity to optimize the cost. And we have found out that our cost propositions can be definitely improved in these areas. So there is work that is happening across all the parameters, our presence in the global market, strengthening our tie-ups and creating desks globally, especially focused on Japan, and also getting the new product launches done perfectly in the country as well as the neighboring markets, plus the manufacturing side. This is over and above what we have spoken in the past. I'm not touching on the R&D, the regulatory aspects and all. So we feel quite confident that this business will grow. It has taken a bit of a time, and last year because of COVID, we had to sort of have in the beginning of the year some of our CPC plants operating at lower capacity, or the plants were shut down due to the lockdown. That has obviously been a 30 odd days between the three different plants, and to that extent the revenues for the year has also got a bit curtailed.
Just to add to Bharat's question, actually our income in this and talking about crop protection grew by 24%.
Yeah.
And I'm talking about full year. The EBITDA has actually increased by 5 percentage points to 17%, reflecting the strong performance. You have alluded to some of the issues in the Q4, and overall it has been a phenomenal performance. Albeit, of course, last year we had the issue with the supplies of sorghum, but overall, on all parameters, we have done very well.
Okay.
Also, Bharat, probably I didn't understand on bio per se, in terms of the Q4 and other things. The bio business has done phenomenally well. We have grown both the top line by 28%, very good traction, and we have seen in America, right?
Okay.
And also the EBITDA is always higher, and it has grown also. And same thing as at the level at EBITDA, it's a 35% growth.
Okay.
So overall, crop protection this time, has been a very phenomenal growth, like we have done for specialty nutrients and for organic. All the businesses have done exceedingly well.
So, just to add, there's, one question. See, full year we registered our 16.6% EBIT margin. So, can we expect a trajectory to improve from here onward with all these things?
Yeah, we saw this, what all the steps that you have taken, we have seen that to improve. And what further steps you are taking, what Jayashree said, we'll hope it will continue to, work towards that. We are also taking a lot of, which firstly with capacity utilization coming full. Obviously, the good thing is the operating income does get up done, and we are looking at really expanding our base, and the domestic, both formulation and the B2B business has done exceedingly well. So we continue to expect this to continue to grow, especially with the new generation molecules that you're launching.
And last bookkeeping question, Jayashree. See, this in Q4, our other expenses has gone up QOQ as well as YOY. So is there any one-off item is there?
Yeah. In Q4, as I was mentioning, there's some amount of additional maintenance, ATA related expenditure that has come in.
Okay.
That's one we must factor in.
And is it possible to quantify?
No, each of our large plants typically have between 8 to 12 crore.
Okay.
When we do the annual turnaround.
Thank you and all the best.
Thank you very much.
Thank you, Bharat.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi sir. So my question is regarding hi. So my question is regarding working capital cycle. So it's improved significantly in FY21. So your trade receivables improved significantly from 48 days to 14 days. government subsidy days also improved on 64 to 15 days. So, talking about overall working capital cycle, can we expect what kind of working capital cycle we can expect in FY22?
Sumant, go ahead.
Yeah. Sumant, I think this year, FY21 has been a phenomenal year, as you could see, right? The government subsidies are at the lowest because they had this additional 65,000 crores that came in, which has actually helped the entire industry, including Coromandel. The next year, the allocation also, as long as the government is able to clear it at the pace at which they are doing, we can expect, depending on the season, between 600 to 1,000 crores in terms of outstanding from the government. I mean, March has been very low, right? That's number one. The second, in terms of trade receivables, given the fact that we had 2 years of consecutive good monsoons, record crop harvest, there was money that was available with the farmers. Added to it, the government's direct transfer prior to the season to procure seeds and all of those, and the fear of COVID being there, whether they will get enough material, has also sort of in a way helped us in mobilizing and getting our market collections. I'm talking this mainly on the fertilizer front. In CPC, we have a little more way to go there. So we've been talking to our sales and marketing team to see how we can maintain this momentum, right? We have to wait and watch. I would say FY21 is a brilliant year. If I can maintain at these levels, I'll be really happy. There could be slight increases because this was one time when we had such record collections both on the trade side as well as on the subsidy front. At the same time, I would also look into inventory, right? We had very low inventory with us all through the year. Actually, this year the company worked in some ways like a FMCG company operating at low inventory levels almost all through the year. The raw material prices have been very soft for most part of the year. Now, as we enter to FY22, we are seeing an elevated price for raw materials. So to that extent, you will see a higher inventory holding in absolute value terms. The quantity may be the same. So there are some puts and takes. We would strive to maintain lower working capital there. But I guess there could be slightly higher number of days compared to the closing that we had.
Okay. So government
just to add, Sumit, sorry if I can just come in here. Firstly, we have been in touch with the government, very happy across the industry that the government has been lived up to its promises. We hear a lot of promises being made, but this is actually, to be fair to the government, it's a dream come true for most agriculture companies, fertilizer-based companies, that the government actually said 65,000 crores, and we were quite, almost took a diffident to it, but it actually executed. When we have spoken to the government again, including the budgets of 79, in fact, if the consumption goes up, the government has said, look, we are very keen that availability of material is there, and therefore don't worry about any subsidies. In fact, when you look at, and I'll urge the thing that we are not selling to consumption. Even earlier on, like JC said, our POS sale is around 300, 400, which is the stock in the channel. Earlier on, it used to be anything between 7 to 800. And the main thing is if you sell to consumption, you get your money earlier. And that's the reason what we are doing, at least as a company, to ensure that we are close to our consumption points and get that out. So I do expect that to happen. And when you don't load raw material in the trade, and this is what we are talking to our CPC and other businesses also, is then you get faster returns on the money because there is a short. And so we do expect at least both on the collection side and on the subsidy side this to continue. I think how we handle our raw material is more of a strategic call which we take depending on whether the prices are going to go up or down. And of course also our holding capacity. And that also helps us in.
So government subsidy days can increase from 15 days to 30, 40 days in this year?
No. So what they are saying is they are they are looking at clearing up all the backlog, and they have said in case, if, supposing they exhaust their budget at 80,000 crores which they have given, they'll ask for a supplementary grant and give that to us so that again the backlog doesn't come back. So that's very positive.
Why loans and advances has increased significantly?
Jesse, you want to take that? I couldn't understand.
No. Can you be? I was not able to understand the question.
The loans and advances has increased significantly. So what component is there?
I'll just come back to you on this question.
Okay. And talking about the capex plan, what are the capex plan we have for the fertilizer and agrochemical segment in this year?
So we have a capex plan of about 500 to 600 crores for the coming year, right? Last year, as you know, with COVID, several of our capex projects were sort of slightly pushed out because we didn't want too many people coming into our factories during the pandemic season. So there is a carryover of last year, and typically every year for regular maintenance capex we spend about 150 to 200 crores across our plants. Apart from this, we have new projects which includes the additional capacities for our PA, tanks, infrastructure at the wharf. We're looking into new granulation facilities in our SSP plants. There are projects on automation and digital. We're also looking into additional plants in CPC for the new products. All of these put together, it's adding up between 500 to 600 crores.
Okay. Do we have a plan for phosphoric acid plant?
No, we don't have. We have done 2 phosphoric acid plants. We are looking into increasing the capacity, increasing the production from the PA plants, for which it is also important to see if there is further opportunity to backward integrate on our sulfuric acids. So these are all ideas that we are working on. Is there an additional 100, 200 tons per day that we can get more? What are certain actions that we have to do to secure it? But it is not putting up any additional plant on PA.
The only thing which we had done last year is going to get implemented is we are putting up a 10th evaporator in Vizag. It should come in July, August. This helps us to not only to move dilute acid to Kakinada, but also move concentrated phosphoric acid to Kakinada and service needs. So that will come up. So we can see that benefit in the second half.
Okay. And the last question is, whatever the price increase you have had thought on that, and with the increase in phosphoric from 795 to 995, are we going to take a price increase in the coming month for that also?
So like we mentioned, what JC had mentioned to the earlier, this thing is that currently, we had bought material at the old prices, a number of things, and it's not just phosphoric acid. We have ammonia, we have other things which we have to look at, including sulfur and all. We had bought that, and therefore we are able, because of that material, we are able to hold prices. As and when that material will get consumed, we will be taking increases. But again, our focus, like I said, will be not on DAP, but on what is called row-grade NPK, which is more balanced nutrition. It also helps the farmers. And in our unique grades, this has already gone through. Yeah.
Thank you so much.
We'll keep looking at the international prices plus a change date to take a call on that.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, due to time constraint, please limit your questions to 2 per participant. Should you have any follow-up, we would request you to rejoin the queue, please. The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
Good afternoon, and thanks for your time. Sorry to circle back on the same question. We understand that a couple of weeks ago, government had put out some kind of an indirect restriction against raising prices. So if I read it right, once we get the new stocks, as an industry, we'll be able to take take whatever price hikes is required, even if, let's say, DAP has to go to 38 to 40,000 rupees per ton? Would the industry be able to take it? And similarly, all our NPKs, probably even at 5,000-6,000 rupees per ton difference, will it increase to that extent?
So just to answer that question, what the government had indicated was that whatever is your stocks in the pipeline, which includes the channel and the retail stocks, please continue to sell at the old price. And that's what people in the industry, and that's what IFCO also said. We are also doing the same thing. What is there at the stock and their level. Once the new price gets established, government may also looking at subsidy, because currently they have made any changes in the subsidy while they had budgeted for it. So they'll have a look at that also, so that there is a reasonable price at least on DAP which goes to the farmer. So we have to wait and watch what happens. Like I said, as far as Coromandel is concerned, we are into NPK, and we are watching the prices as per what grades we produce, what efficiencies we get very, very closely. And we increased even our unique grade shares sales for them. Therefore, we are a bit more price elastic in terms of looking at how we look at the business. Currently, Q1 for us again is a non-season as such. So it's not something which we are too bothered about.
By when would we have to have a dialogue with the government to increase the price? I understand the current stocks probably.
No, I don't think only the companies are allowed to increase the prices. This is as per the NPK thing. The government has just told us that, look to the industry as such is, please do keep us informed so that we can also see the impact and all. And this is for the DAP players who are looking at it. Yeah.
Hello. Got it. Hello.
Thank you.
Thank you. The next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, thank you for the opportunity. So I have a slightly different question on this price increase is from the volume perspective. As we understand, we have 40 to 50% import of complex fertilizer in India. And obviously, as you mentioned initially, farmers may also, in a way, will move to some of the unique grades because the prices have gone up significantly. So in that case, do you think that in this year, from volume perspective, you will be able to sell at least what you have sold last year? Or because we have some advantage compared to the industry from perspective.
So two things. Firstly, it's a good question. Two things first. One is we are sitting on our lowest ever pipeline, right? Number one. Secondly, there's a forecast of a normal monsoon. Therefore, I don't see any issue as far as we are concerned from a demand point of view, right? As we talk about it. We have more constraints from a supply point of view, given the fact while we took our ATS, obviously with the COVID situation and all, for us, the first thing priority is the safety of our people and of the plant. Right? But the good thing is last year also we were able to tackle this year and last year the government had given certain restrictions. They then realized that is not workable for a continuous industry. They don't want to have issues which had happened, like with number of, like LG and other things. So they have now looked at it very favorably, and obviously this is something which churns the thing. So that's where we are. And as far as we are concerned, that's not a problem. Definitely what you are saying is right, that if the prices of DAP go up quite substantially, farmers firstly will look at balanced nutrition, which is good. Not only that, they will also, especially in north and west, the substitute for that is single superphosphate. And single superphosphate is also, as long as the quality is good, is also more helpful to the farmers because it gives more, not just the P, but it also has other things like calcium and magnesium, which is also helpful for the soil. So we do expect the sales of single superphosphate also to go up, and we are gearing up for that. So as far as we are concerned, it's not so much of an issue. Our market anyway, because the way we have converted is more of a balanced nutrition market. And we DAP is only looked at a fill-up gap. And anyway, our manufactured brand Godavari DAP has a very strong market for it. It's one of the strongest brands available.
Correct, sir. So just the second question is on SSP, which you highlighted. I think in some of the quarter we did around 2 lakh tons kind of volume. So if you can just highlight what is our capacity, and you did mention about some capex being done on the granulation side in SSP. So what kind of capacity do we have in hand, and what kind of growth are you looking at in SSP?
So first thing, we had a good volume growth on SSP. Both we increased our income by 19%, right? And we were able to do 6.7 lakh metric tons. Next year, we plan to do around 7.28 metric tons. But we also have a couple of plants which we can actually now, given the fact that we have not just selling SSP, we also have something called what is called a Grow Plus, which is a value-added product which we sell, and farmers are now asking for Grow Plus, not just SSP. So that is something which we are doing. In one particular thing, what we had also done, which is a good thing, is we actually invested in what is called a sulfuric acid plant at our plant in Ranipet to meet some of the sulfuric acid needs. And with the high price of sulfuric acid which we are witnessing, this has been the step in the right direction. The plant has come into operation. So there are a couple of other places where we are getting into, because normally it is powdered SSP, but we are finding there is more demand for what is called granulated SSP. The reason is simple. Powdered is mainly used as a basal application, while when you have granulated, you can use both as a basal and as other application in the soil, especially in the oil seed plants and all. And with the push of government towards oilseed, the sulfur-loving plants, will actually grow up. So that's something which we are looking at forward with SSP on that. So we do intend to do that. We could potentially look at even a capacity of, which is a slated capacity in the plants of 1 million. But we are going step by step, because certain plants currently are not economical. But as we move into value-added products, it will make sense for us to divide those plants.
Okay. Thank you, sir, for the detailed answer, and all the best.
Thank you. The next question is from the line of Tejas Sheth from Nippon India Asset Management. Please go ahead.
Hi, good afternoon, sir. On the phosphoric acid prices, what is leading to this steep increase, and how you see it? How long you see it lasting in? Because these are never seen before prices.
No, this has happened in the past also. It's not over the years, so that's one thing. I think the overall why phosphoric acid and all other agriculture commodity raw material prices have gone up is last year has been a very good agriculture season for all the four big consuming markets, right? So number one is Brazil, US did very well, China did very well, and India did very well. So all these markets did well despite the fact that there was a COVID issue, right? So that was one. Secondly, there are also emerging markets which are now consuming more of what is called fertilizer consumption, which are untapped, particularly markets in Africa. So that is again something which is happening. Third, because of the COVID, a couple of plants, including our JVs, were not able to operate fully, and therefore there was a capacity constraint. Same will apply for ammonia. For example, because some of the plants had taken out a shutdown, right? And of course, some of the capacities, whether it is of urea and ammonia, are blocked in Iran because of the trade war which is happening with the US. So the ban which is happening with the US, which we expect will happen. So this has been one of the reasons. At the same time, like all commodity prices, and this is not just related with agriculture inputs which we have, or fertilizer inputs, because of the money which has been spent for COVID, there has been a general increase in all commodity prices. You take iron, steel, everything has gone up. And also China had a major, which normally is also a net exporter, was leading to major consumption also within its own. Now, we do expect some softening of it to happen now that the major season of all these other markets are gone. So like it happens in, in the middle of Q1 or when our Kharif season begins, China will come in and there will be certain amount of softening which is happening. At the same time, the government has written, like it did for natural gas and to OPEC, they have written to some of the companies because there is certain monopolistic tendencies for them to actually look at fair pricing and availability of the material.
Okay. And sir, secondly, the old cost inventory would suffice us to meet what share of our Kharif demand?
Kharif is a long time off. That is only for us, it is in July, August, September.
Yeah.
So anyway, for that, it's still time. We are looking at Q1 just now. Jayashree alluded to the fact that, we had covers for a month or 1.5 months for the current thing. And we'll also look at, because these are replacement months, so we look at, selling more towards consumption.
Okay. So in a way, you will defer to fill in the trade closer to the Kharif?
No, again, like I mentioned, and this is a term which I don't like, coming from an FMCG industry. I don't like to fill up the trade. We'd rather sell to consumption and where the farmer wants it.
Okay.
The only thing which you sell better if it ages is wine or whiskey. We are not into that business. Yeah.
Okay. Thank you very much.
Okay.
If I could just step in for a minute. There was this question on the financial assets, loans reflecting 1,500 odd crores. The response to that is these are intercorporate deposits. It's nomenclature in the books comes as loans, but these are the surplus funds that are being invested. Thanks. We can take one last question if that's fine.
Thank you. We take the last question from the line of Varshit Shah from NK Global. Please go ahead.
Thank you for the opportunity and wish good health to everyone at Coromandel family. So my question is as related to intercorporate deposits. So are they two group companies at arm's length interest rates or these are not two related parties?
None of this is to related parties. These are all kept in banks and institutions external.
Okay. So why it is renamed as intercorporate deposits instead of investments? I mean, is there some accounting mandate compulsion?
Yeah, because if it is a bank, we call it as deposit. If it is going to be in say HDFC Limited, for instance, right? Then the accounting nomenclature is that. But it has nothing to do with any of the group companies, no related party transactions at all.
Sure. And my second question is on the capital allocation. So I think you are sitting on a sufficient amount of cash to take up any either inorganic opportunity or any organic large initiatives. So maybe where are we on that in terms of probable pipeline building up, or at least we should not expect anything in the near term?
Yeah, there are two ways to this, Rashid. One, as we mentioned earlier, Coromandel is open about looking into inorganic opportunities as long as it is synergistic and it is complementing with our current businesses. So that's one, and if it is a good target, it comes at a decent price, we'll definitely be open to look into it and move ahead. The second one is in terms of our own organic growth. Here again, as I was mentioning, there are two things that we are looking at. One is a CPC where we are looking into next 2-3 years, what are all these molecules which are recently gone off patent, where we can build up our technical manufacturing, for which work has already started. We are also looking into how to be backward integrate, because there's no point in just doing the technical manufacturing if you're not backward integrated to N-1, N-2, because for a long period in time you have to remain competitive. So there is quite a bit of work that's going on that front on the CPC. As far as fertilizer is concerned, like Sameer was mentioning, it's about how we strengthen our infrastructure, be it an evaporator, putting up a new liquid fertilizer, adding capacity at our WAF and our plants for additional storage. There is also projects that's going on in terms of internal infrastructure. As I was mentioning, there is this PAP that we can possibly take up our daily production, but for which we will also have to look into, additional godowns for our rock, see how we can further backward integrate in terms of our sulfuric acid requirements. So multiple things are being looked into. At this juncture, what we're also doing is, given that it's about a couple of years since we did our LTS or our long-term strategic plan, we're also revisiting it, saying in the current context of what's happening, should there be something more that we should look into? Given the fact that we do have surplus with us, how do we deploy it? So a lot of these are being currently looked into, and hopefully we should find some very good avenues where we can deploy our funds meaningfully, which can maximize the return to all our stakeholders.
And when we talk about the AgTech, what we are doing, we have set up a separate fund for AgTech.
Sure. What we are also doing in some ways is also to accelerate our innovation agenda. When we did our earlier long-term strategic plan, we said we will have to be invested in AgTech. As you know, through our joint venture, Yanmar, we've been in a way into mechanization. We have been looking into several startups. How do we collaborate with them, both in India and in other global destinations? Also working with several of the IITs, where they nurture a lot of these young entrepreneurs who are into AgTech startups. So recently we have set up a team which should be actively looking into the AgTech companies, where we can support them, see how we can provide them the canvas which Coromandel has to test, try, scale up. That will also help us to look into things from a newer and a fresher perspective. So that's another big focus area we are doing. We're starting in a small way, and this fund will keep increasing over a period in time to see how we can get the maximum out of learnings and new technologies that the young startups can come up with.
Sure. Just one last question. Are you expecting your Q-o-Q margins, EBITDA per ton, to actually sort of cool down because of the raw material price inflation?
Here again, I would say that we should look at a full year, right? On a quarter, you may have aberrations depending on raw material prices, demand, so on and so forth. But on an annual basis, I think steadily we have been improving. And there are several actions the company is taking, including the operational efficiencies, different grades of rocks because of the type of flexibility we have built in, branding, some pricing actions. So on a full year basis, I would think that we will continue to maintain our momentum, hold on to where we are.
Sure, that's helpful. All the best and wish all of you good health.
So thank you very much.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Ankur Periwal for closing comments.
Thank you everyone for being there on this conference call and for the active participation. Samir sir, over to you if you want to add any final remarks.
No, I think firstly, it's to everyone, we are into an endemic, and particularly some of our investors, friends are in metros like Bombay, Bangalore and Delhi. They need to really keep safe and also keep their family safe. So we hope they are doing that. As far as we are concerned, especially now, our efforts are basically just, what's called the safety and security of our people and plants. And also we are working with the government to see how we can help them to overcome with this endemic. And like I said, we've already put up 5 oxygen generating plants, which we'll be putting up in hospitals soon. This is not a core function, but this is something which we are going to help out as part of our CSR initiatives. But the good news is that, agriculture like last year will continue to be a good one. It will help to feed the nation. It will also help to keep the economy going. It will also help to build up the rural demand. This year, the question would be in terms of not as much as the demand, as much as what we can supply the market. So again, we are in a good position, and we hope to continue with all our efforts what we have done in the past as we learn in the future, including digital reach out, working, automation of our plants, really using what is called ag tech in a big way. It's already accelerating our agenda. So we hope to do that just to ensure that the farmers' prosperity will increase. And one candidate had the question about imports of DAP. One of the things we have presented to the government in the past, like they have done here, is to continue to, go for Atmanirbhar Bharat, also on the NPK sector, so that, we are not dependent on the vagaries of importers. Right. So that's where we are looking at. Thank you.
Great, sir.
One more comment from my end. I do understand that there are a few more questions, and we are about 8-10 people in the queue. While we are closing this session due to paucity of time, kindly come to us with your questions. You can reach out to Saurav or me, and we'll be happy to respond to you. Thank you very much.
Thank you.
Thank you, ma'am.
Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.